Right now, we're in a short-term deflationary environment, but to talk about the growing inflation threat is Thorsten Polleit, chief economist at Degussa, Europe's largest precious metals trading firm. Thank you very much for joining us today, Thorsten.
Thank you very much for the invitation. It's a great pleasure to be on your show, Neil.
So now let's talk about inflation. In your last report, which I thought was really, really interesting, you said inflation's more than just the price of food at your grocery store. Why do we need to pay more attention to the growing inflation threat?
Inflation typically is defined as a rise in the consumer price index. Most people would think if consumer prices increase by more than 2%, that's inflation. But this concept suffers from various problems. One problem is that these consumer price indices do not include important goods like, for instance, asset prices, like stock prices or prices for housing and real estate. And that is not included in these statistical measures used by most people defining what inflation is. And so, what we have seen in the last decades is that consumer price inflation has remained relatively tame, but at the same time, asset prices have inflated greatly. The prices for stocks and houses have gone up sharply, and as a result, it has resulted in a decline in the purchasing power of money. People became poorer, people who hold on to money compared to those who held stocks and bonds and houses in their portfolios. So we have witnessed a period which was not inflation free, but there was a lot of inflation.
What does the global economy face as we see central banks and government just flood liquidity into financial markets because of the COVID pandemic?
I think the politically dictated lockdown causes an economic catastrophe in many countries. You have mass unemployment, the production collapses, people get into very difficult situations financially, economically. And at the same time, governments try to fight this economic crisis by printing up ever greater amounts of money to make up for lost incomes and lost profits. And if there's one economic law out there, it is this. If you increase the stock of money in an economy and at the same time production declines, I think this is the recipe for higher price inflation going forward, be that higher consumer prices and or asset prices, increasing asset prices. I think this will be the consequence, the ultimate consequence of this so-called bailout policy.
Do you see stagflation in the future then? High inflation with low growth?
I think that is a plausible scenario. The economic system contracts at the moment, and I think a lot of capital will be destroyed in this process, and it will take years to rebuild it. And so the production capacity will be reduced, and the economic recovery will take quite some time. And at the same time, you have this tremendous monetary overhang. For instance, in the United States of America, the money stock M1 increases by roughly 30% per year. M2, a broadly defined monetary aggregate, is rising by around about 20%. So this is the monetary overhang that sooner or later will be felt in terms of rising prices.
So how does gold play into this then? I mean, we hear it as, the hedge against inflation. Why, in your opinion, should investors be looking at gold in this environment?
I think gold is the ultimate means of payments. It has been with us for more than 3,000 years. Paper monies have come and gone. Gold has remained with us. It's basically perfect money. And this is the take I have. Gold is a competitor to the US dollar, to the euro, to the Japanese yen, the Chinese renminbi. And gold is sound money. Gold cannot be devalued by central banks running the printing press. And at the same time, gold does not have a default risk. For instance, banks can go belly up and deposits can be destroyed. And you wouldn't have that kind of risk with holding gold. Gold does not have a payment or default risk. And so it's actually a kind of safe haven. And I would recommend holding gold because it is risk reducing and return enhancing from the viewpoint of any investor and saver.
Well, and you pointed out actually in your research that one of the issues with inflation is it really picks winners and losers. And the smaller you are, the more you have to lose. It's not the big guys who really take the hit. It's the consumer. And I'm sort of wondering, I mean, can a economy like the US grow if its consumers are taking a hit with its purchasing power?
Inflation really is an evil thing. It, as you say, it creates winners and losers. Inflation is basically a redistribution of income and wealth among people, and rising prices are just one possible symptom of the underlying cause, namely increasing the money stock. For instance, in the current rescue policies, big banks, big business, they get the big amount of newly created money, whereas normal people don't get any additional money or just small amounts of money. And this shows you that there is a huge redistribution of income and wealth going on, and it will turn out that some people will get rich at the expense of many others who will become poorer. I think this is that's the truth about central banking. A central bank that increases the money stock creates beneficiaries and those who miss out. And so I think it's important that people know about these consequences, because they lead to income equality and, of course, political and social problems further down the road.
Nothing really seems to be stopping gold except the US dollar. I mean, sort of put your feet to the fire a little bit. Where do you see sort of the price of gold by the end of the year?
As a rule of thumb, I think with the ramping up of the money stock all around the world, it shouldn't take long for gold to move up to $2,000 per ounce. I think that is a perspective which makes buying gold, even under current circumstances, given the current price, still an attractive option for many people. Just to move away from this unbacked paper money and seek building up a decent portion of gold within your portfolio.
What are your thoughts really quickly on silver?
If you are optimistic that the price of gold is moving further up, I think there's a strong reason to also include some portion of silver in your portfolio, because the price gap between gold and silver is at a record high. And if history teaches us something, it is this: sooner or later, the price of gold and silver move in tandem. And at current prices, I think there's a tremendous upward price potential for silver. But as I said, it's conditioned on your expectation that the price of gold will move further up, which I think will be the case. And so I have no problems recommending to you to hold at least a decent share of your precious metal portfolio in silver.
Thorsten, thank you very much for this conversation. I was really looking forward to it, and I really, really appreciate your thoughts.
Thank you very much for the invitation. The pleasure is entirely on my side, Niels, and I hope to speak to you soon. All the best.
Thank you very much for watching Kitco News. For the latest information in the precious metals markets, go to kitco.com. Stay safe and stay healthy.